Let me get to the.
Everyone can see that okay.
Don't you love when the Zoom controls get in the way of the. Hang on here. All right, I think I'm in business now.
Yep.
All right, guys. So, yeah, piggybacking what Phil just said, we're going to do this every Tuesday, and there's just a million moving parts to this thing, right? As there is with life insurance, right? And all the different carriers and all the different nuances that exist when it comes to the products, right? So today is gonna be really, elementary, if you will. We'll do some health insurance 101 and just kind of talk about some of the lingo and what's available out there. And then, I'll go over a little bit of, things to come, right? And obviously I want to talk also on what our portfolio is going to look like in terms of products and carriers, and give you guys a little idea of the opportunity that exists with some of these products, because I think that on the life insurance side, um, agents have uh, a little bit of a misunderstanding of the real opportunity that exists in the health insurance space, right? We know that the ACA products, the commissions are minimal, right? But the products that are outside of the ACA, often known as the private health insurance market, those are some big ticket commissions, and the opportunity to target that clientele and make some money certainly exists. All right, so that's going to be our wheelhouse. That's going to be our focus. All right, so health insurance 101. What is health insurance? We'll just start by giving you guys the real generic.
Alexa, stop.
Definitely give you guys kind of the generic definition, and then I put it in my own terms. But health insurance is a type of insurance that covers medical and surgical expenses, right? We know that. Helps protect you from high healthcare costs. But at the end of the day, health insurance can be defined in three simple words, and that's access to care. I mean, that's what health insurance is at the end of the day. Health insurance is going to give you access to healthcare. Why do we need to have health insurance, right? And I know that you guys are passionate on selling life insurance, and you understand. You guys could sit there and be across from a prospect and be able to tell them all the reasons why they need life insurance, right? And pull out all the very emotional sales tactics, right? When selling life insurance. Well, health insurance is no different, right? It's going to be financial protection against unexpected medical expenses, access to broader network of healthcare providers, again, access to care, access to doctors, and coverage for preventive care, which can save money, over time. Obviously, there's a few, other things that a health insurance policy will do, but those are going to be some of the main motivations for people to obtain health insurance. And everybody knows they have to have it, right? But I use this line and I put it in quotes because this is actually a line that I've used in multiple presentations, and it really drives it home, right? If you're on the fence with somebody, a prospect, and they're like, yeah, I know I need health insurance, but I'm healthy and I hate paying the bill, right? And some people, have been so turned off by health insurance that they've elected to go without it, right? Because it's such a mess. The healthcare system's a mess. They don't want to deal with it anymore. They don't want anything to do with it. They'll go without it. They'll pay cash. They get a better deal when they're paying cash anyway, right? A lot of people, might have been priced out of the health insurance market, right? With the premiums going up like they have. But at the end of the day, most people are going to know that it's something that they have to have, right? And I tell clients all the time, I use this line verbatim. Remember this, write it down. You guys will have this recording. This is a very powerful line, but I tell people, look, at the end of the day, you've got to have that health insurance card, right? Having that health insurance card in your pocket could be the difference between getting the care that you need when you need it versus being given a pocket full of pills and being sent home and being told to go get comfortable. That's the reality, right? And people understand that. They know that it doesn't matter what health insurance card they have in their pocket, whether it says Blue Cross Blue Shield or it says Manhattan Life or private healthcare systems. It doesn't matter. If you're out, if you're laying out on a stretcher and they look in your wallet and find an insurance card, the doctors, the hospitals, they know they're getting paid, right? And it's a little sick, right, to think of it like that, but such as, some of the negatives when it comes to capitalism, right? And that's just the way it is in our industry. They want to know they're getting paid, right? So if they don't think they're getting paid, you have no insurance. Their job is to stabilize you and get you the hell out so they can move patients in that do have coverage and they're gonna get paid for their work, right? So again, I'll say that again. I think that's a very powerful line to use when you're presenting. Look, man, you got to have health insurance. Having that card in your pocket is could be the difference between you getting the care that you need when you need it versus being sent home with a pocket full of pills and being told to go get comfortable. All right, key terms with health insurance. Again, I know this is elementary, but just bear with me. We'll get into some of the meat and potato stuffs here in a little bit. But key terms, premium. You guys all know what that is. That's the amount that you pay for your health insurance every month. That's the bill, right? That's the number that we hate. I just paid my car insurance premium earlier today, and I told my assistant, I said, if there's one bill that I hate paying, it's that car insurance premium, because down here in South Florida, the rates have gone through the roof. I've got a clean driving record. I despise paying that bill. Deductible. Okay, the deductible is the amount that you as the policyholder are responsible for before insurance kicks in. Okay, most of you probably know what that is. If not all of you know what that is. These next two, people tend to confuse these next two. A copay, all right, or a copayment. A copay is a fixed amount that you pay for a covered service. It's specified in the policy, okay? A copay for doctor visits would be, say a $20 copay. All right, you're going to pay a $20 copay when you go to the doctor. Coinsurance is a percentage of costs that you pay after meeting your deductible. All right, so coinsurance is that part of the policy that defines 80-20, right? 70-30, 90-10. And again, most people understand what that means. Coinsurance does have a cutoff, though, right? In other words, that is what needs to be obtained in order to reach your out-of-pocket maximum. I probably should have put that term on there as well. All right, out-of-pocket maximum. So on a traditional major medical policy, your deductible is going to be defined and your coinsurance out-of-pocket maximum is going to be defined. It might read something like $5,000 deductible with an 80-20 coinsurance to a maximum out-of-pocket of $3,000. Well, the total out-of-pocket on that plan would be $8,000. Okay, it'd be the deductible plus the coinsurance. The max out-of-pocket would be $8,000. All right, and then once you pay the $8,000 out of pocket, you are then covered 100% up to an unlimited amount or a specified amount by the policy. Okay. All right. So types of health insurance networks. These are going to be networks that you're going to see on the ACA market. We're going to talk more and more about ACA probably in the third quarter, right? As we get closer to the open enrollment period, we'll take a real deep dive into the ACA plans. Most of, actually all of the health insurance policies in the private health insurance market are going to have PPO networks, but these are going to be terms that are going to be relevant when we're talking about ACA plans. So first, you got HMOs. HMO stands for Health Maintenance Organization. Okay. If you have an HMO network, then you must use the providers that are in the HMO network, and you need to get referrals to go see specialists and get procedures done. You need to get referrals to have diagnostic care, right? To receive diagnostic testing. And all that is done through a primary care provider. So with an HMO policy, you're going to have your primary care doctor, and then that primary care doctor is going to direct you through the different lanes of the healthcare system as needed. Okay, that's how an HMO works. With a PPO, all right, it's a preferred provider organization. As long as the doctor is in the network, you can go where you want. You've got more flexibility in choosing providers. A lot of times the PPO plans would have a little higher out-of-pocket cost, and actually 100% of the time they're going to be more expensive on the premium. But people like having PPOs because, if you go see your primary care doctor and you don't like him or her, you can go to the next primary care doctor, right? The following month, right? You're not stuck with a specific primary care doctor. You need to see a specialist, you go see the specialist, you make the appointment and go. You want to have some diagnostic testing, you don't need a doctor to tell you that you can get it done. You just go get it done. All right. So those, you get a lot more freedom with a PPO network. All right. An EPO is an exclusive provider organization. That is like a hybrid. Okay. So it's going to be like an HMO network that you can move freely throughout. Okay. So most of the time when you have an EPO network, it's going to be very local, right? PPO networks, a lot of times it's nationwide, right? It doesn't matter where you go. But with an EPO, let's say, so I live in the Fort Myers area, my EPO network might likely just include doctors that are in, Southwest Florida. But if a doctor is in that network, I don't need a referral to go see that doctor. I can just move freely. Okay. So much more handcuffs with the HMO, no handcuffs with the PPO at all. And with the EPO, you're free to move around the network as long as the doctors are in network, and that network is going to be very localized. Okay. All right. Now, if you have health insurance in America, you have one of four types of health insurance. You have number one, employer-sponsored health insurance, which is group health insurance. You have Medicare. All right. You have individual health insurance, or you have government health insurance, which is Medicaid or VA insurance. Okay. You have one of those four if you have health insurance in this country. Let's take a little deeper dive into each category. So employer-sponsored health insurance or group coverage. This is going to be the largest block of insured out there. Okay. There's 170 million people currently that are insured through their group plans. Usually the ones making the decision on these group plans would be an HR director or a CFO or the CEO of the group. The process for selling group insurance is going to be first for you to obtain a group census. Okay. So let's say you've got a business, right, that wants to, is going to give you the opportunity to earn their business. Okay. And you're talking to the decision maker in the company, or at least somebody that's in charge of getting the process started. And, the first step that you're going to do is say, okay, I need a census of all of the employees and their family members that are going to be insured. And they're not new to it, unless it's a smaller business that just blew up and, it's their first time buying group health insurance. They might be new to it, but for the most part, if you are, about to do business with a group plan, and you say, hey, I need a census, they all know what that is. And a lot of times they'll have it ready to go, right? They keep those really good HR reps are going to keep their census up to date, right? Because a lot of times they use it for more than just purchasing, health insurance. So the first thing you're going to do as an agent is acquire the census of the group. And, and we'll take, when we train on group, we're going to go into this in more detail as well. But you're going to gather as much information as possible from the group and their current coverage, right? Because, again, when we get into it, you'll see, we've got level funded plans, we've got fully insured plans, and there's certainly an advantage with the level funded for these policies, for these groups if they're healthy. So you want to get as much information on the group as possible. Okay. Just kind of the 30,000-foot overview would be if they have coverage currently. If so, what deductibles do they have? What are they paying would be an important piece of information for you to gather. All that's going to do is make you more competitive when you go and you get, proposals and you bring it back to them. Okay. And because the way that works is once you get the group census and you'll submit it to a carrier, let's just use United Healthcare as an example. So I get a census from a group. I will then submit that census to United Healthcare. Each carrier is going to have a group rep that you work with directly. And I'll say, Mr. Group Rep at United Healthcare, please give me a proposal for this group. They are literally going to send me a proposal that's 89 pages deep, right? It's got every single policy option available and every single variation of that policy in terms of copays, deductibles, coinsurance options, and what the price is on each one of those. Now, if you take that proposal back to the group decision maker and you say, here's 89 plans, right? 89 pages of different plans, right? There's 175 different options for you. Pick the one you like and we'll go with that. That's probably, we're going to lose that deal, right? So you'd want to, have as much information as possible. And then you can kind of compare apples to apples. Okay, they've got a 5K deductible with, Blue Cross Blue Shield currently, right? They're paying X amount of dollars. I'd find the 5K deductible or something that's going to beat it with United Healthcare. I'm going to, hey, beat your deductible, beat your price tag, right? And I'd come back to them with 4 or 5 different options, right? So anyway, we're going a little in the weeds on that, but that's the process for group. It is a longer sales cycle. All right. And then once you close the deal, but I'll tell you what, I've got friends in this business that do nothing but group, group business, and they're making a couple, $2-3 million a year. And, one buddy I'm thinking of in particular, you guys loving life. He's a Greek guy from Chicago, and all the Greek restaurants up there are his clients, and he's just killing it. So he obtains the client stays with him usually, as long as you're doing your job.
Oh,
The time that business is going to stay with you. Okay.
you froze for a sec, so I was like, uh-oh.
Are we good?
Yeah, you're good.
Okay. Sorry about that. Hope you didn't
All
miss
good.
too much.
No.
All right. So Medicare is, over 65 years old. Okay. To get Medicare, you got to be 65 years old or older. Or you will have to be on disability, permanently disabled for 2 years and beyond would also make you eligible for Medicare. Okay. There's 2 types of Medicare plans. You've got original Medicare, which would be, you get your Part A and your Part B, and then you'll buy Medicare supplement, or you can do Medicare Advantage. Okay. And then we have the individual market, which is my wheelhouse. All right. This is the playground that I play in. If you guys do pay attention to politics at all, you'll know that this is by far the most heavily debated type of health insurance policy that exists, right? And I look at that as a positive. I remember when the Affordable Care Act became the law of the land in 2014, and the industry just was flipped upside down. I mean, I saw guys in this business with 35 years and that were unable to reinvent themselves. So it was an interesting time. In fact, up until that point, that was all I did was sell individual health insurance. But I figured, if I'm going to stay in this business, maybe now is a good time to learn life insurance, to learn, Medicare. And that's what I did. I played in the senior space for a while, selling final expense and Medicare supplements. But ultimately, I stayed in the under 65 market because, no matter what, whenever one regulation comes out or one new law comes out that changes our industry and flips it on its head again, that creates tremendous opportunity because it confuses people, right? And if you stay informed on those changes, then you're obviously going to be the expert that people look to for the answers, right? And so I look at it as a positive that our politicians can't seem to get it right. And I think that it just brings, tremendous opportunity. So the people that are going to buy individual health insurance, okay, would be anybody that doesn't have the other options available that I just talked about, right? They're under 65, they don't have Medicare, it's not offered through their job. They're self-employed, right? That's going to be our main target market that we talk about. Okay, if any of you are interested in deploying a marketing strategy, we're going to be targeting under 65 self-employed individuals. All right. Anybody that's in the gig economy, right? Or, contractors, 1099 contractors. All right. All of these people are going to be prospects for under 65 individual health insurance. And I'll tell you guys this, when I got into this business, there was 18 million people that bought their own health insurance. And back then, there was probably somewhere in the ballpark of, say, 35 different health insurance companies. So you got 35 health insurance companies that are literally just trading the same 18 million people back and forth. Nowadays, that market, the market of individuals that need to buy their own health insurance, is north of 50 million people. Why is that? Well, through the rising cost of health insurance, number one, a lot of businesses have elected to drop their group plans and not offer benefits anymore, right? Entrepreneurship has become cool, right? Everybody's an entrepreneur these days, right? So getting on, building your own business obviously requires you to buy your own benefits. And then the gig economy has exploded, right? I mean, think about all the Uber drivers out there and the Grubhub delivery drivers. I mean, these people all need their own health insurance, right? The servers of the world, right? They don't get health insurance from their job. So again, this market that was once 18 million people is now north of 50 million people. And we don't have 35 health insurance companies out there that are competing. All right. You've got your ACA carriers, and let's just say on average, there's 2 or 3 options in any given county, right, on the ACA. And then in the private market, we've got 4 or 5, really competitive carriers. All right. So again, tremendous opportunity. All right. So let's dive in a little bit to the under 65 individual options. Okay. First is going to be marketplace, okay, or ACA, or on exchange, or Obamacare. Anytime you hear any one of those, okay, they all refer to the same thing. Okay, so a marketplace plan is an on exchange plan, an ACA plan is an Obamacare plan. It all means the same thing. Okay. And the opposite is going to be off marketplace or off exchange or non-ACA. All right. I also should have put in there private health insurance. Okay. What makes up the private health insurance market? Now, let me back up real quick. So if it's an ACA plan is a lot like Medicare supplements, right? Like, with Medicare supplements, a plan G is a plan G is a plan G, right? Every plan G is exactly the same. The only difference might be the premium. Well, an ACA plan not every policy is exactly the same and all the coverages are exactly the same, but they all have to cover what's called essential health benefits. Okay, so they all have to cover pre-existing conditions. They all have to cover hospitals, surgeries, prescriptions, doctors. They all have to cover 100% for wellness. Um, they all have to have unlimited coverage available. Okay, so there are things that an ACA policy must do in order to qualify as an ACA policy. Okay. Now, in the private world, in the private health insurance market, that those essential health benefits don't exist. Okay, these plans can be built however they however the insurer wants to build them, and obviously they've got to be competitive if they want to sell them, but they can offer as many different levels and nuances to the policies as they want, and they do, right? And we'll go over those. But what are the types of policies that exist in the off exchange world or the private health insurance world? Number one is association health plans. This is something that actually just got figured out, right? Where there's a couple of carriers that are doing it now, and they don't even refer to themselves as association health plans, right? But essentially, that's what it is individuals have an opportunity to buy in to an association or a group, right? And obtain be a part of the group and get the coverage that's available. So there's a couple of carriers out there that are doing it. We will be marketing both, all right, and have access to both. There are short-term health insurance policies. This is kind of the one that's been, where the tug of war has been going back and forth, from administration to administration. One of the things that when the ACA came out, these insurance companies were looking for alternatives, right? If you were staring a $1,500 a month premium in the face on the marketplace, and that was your cheapest plan, and the deductible was $6,000 or $7,000, you would probably look at alternatives, right? Well, in the beginning, short-term medical was one of the best options to go with. Okay, because the good short-term medicals are going to be, they work just like major medical plans. They're essentially their term health insurance, right? So they expire, right? They've got major med plans that expire. But what used to be able to get a short-term plan for a duration of 12 months. And during the Obama administration, they knocked it down to 3 months. And then the health insurance market, they got smart. They said, okay, well, now these carriers, they created 3x4s. So they let you chain 4 3-month policies together, essentially giving you that block of 12 months worth of coverage again. Then the first Trump term, Trump allowed those short-term plans to be sold for a duration of up to 36 months. Biden came in and Biden knocked it back down to 3 months, and he closed the loophole on chaining the policies together. And that's where it currently sits. Okay. We haven't, actually, there are some states, I take that back. There are some states that have brought back those 36-month plans, but there's a lot of states that still haven't yet, right? In the Trump 2 term, right? So the short-term plan is kind of the one that's gone back and forth, and has had that tug of war, played. But I like the more permanent options. But anyway, short-term medical plans, indemnity plans. Okay, indemnity plans. We're going to sell the best indemnity plans on the market. All right. The reason that the short-term plans, I think, were the most popular as an alternative to the ACA very early on was that the indemnity plans were kind of crappy. Excuse my language. They were, there was nothing special to them. Today, these indemnity plans are, like indemnity plans on steroids. I mean, these policies, they will give, in most cases, more than enough coverage to the policyholders for the different things that they're going to use it for. So there are some very, very good indemnity plans out there that we'll be selling. And then there's health shares. I threw that on there. It's an option. I'm personally not a fan of health shares. We're insurance agents, so I think we should be selling insurance. Health shares is not a health share plan is not insurance. You can't call it insurance. You actually have to call it sharing. And the thing that turned me off the most with these policies is the very first line states that sharing is not guaranteed. In other words, imagine you bought a health insurance policy and the first line said, health insurance benefits are not guaranteed, right? They can deny a claim whenever they want. So, again, it's an option. In fact, the reason I put that on there is when you do come across a prospect that has a health share, you now have a great rebuttal to go in and actually sell them a health insurance policy and get them off that health share plan. All right. So, and then we've got ancillary products. Okay. You guys will hear me talk about these policies and refer to them as supplementals a lot. Okay. So supplements, the ancillary products are going to be your gap fillers, right? Now, when we sell health insurance, individual health insurance, we'll have an average of probably 3 policies that we will bundle together to equal one rock star package of health insurance. Okay. Because if you're selling an ACA plan, most of the time the out-of-pocket max is, $10,000, right? So we're going to put a supplement in there to fill that gap. If we're selling an indemnity plan, as good as a lot of them are these days, there's still some gaps that we need to fill, right? So we're going to sell accident plans with pretty much everything that we do. Now, an accident, there's 2 types of accident plans. You got AMEs. An AME is an accident medical expense, meaning that the policy will pay up to a certain amount, right? Let's say you have a $10,000 AME policy. The policy will pay up to $10,000 for medical expenses that are incurred for an accident. Okay, so if you have a $3,000 bill for a broken finger, then the AME policy will kick in and pay $3,000. Okay, it'll pay up to $10,000, but it's only going to pay, the amount of medical expenses that are incurred. And then you have accident indemnity policies, which are kind of like AFLAC, right? Where, they'll have a specified amount that they'll pay, for accidents. In other words, compound fracture, they'll pay $1,000. Stitches needed, they'll pay $500, right? And so that would be an accident indemnity policy. Critical illness, you guys are probably very familiar with critical illness, would be my guess, right? Living benefits, right? Same thing. So critical illness policies. Critical illness policies are going to be the highest commissionable policies that we sell. Okay. So, not only do you want to, get them in there and make some money, right? But you want to get them in there to cover yourselves. I'll tell you guys this, critical illness policies are what gets me fruit baskets at Christmas, right? Because, when a client is, God forbid, diagnosed with a chronic illness, and they call me and, I've got this, had this chronic illness, it's almost like it didn't happen when I say, well, let's get the claim in because you got a $50,000 check coming your way, right? All of a sudden, there's a little less stress level, right, in that patient. Okay, so critical illnesses, going to be a benefit that I'm very passionate about selling, and I think that that's going to be a good one to include in every policy that you guys sell. And then you have dental and vision, which I say dental and vision is sold like French fries. I never include dental and vision in any quote that I send because I know that when I get to that point, when I close a deal and I say, would you like dental and vision with that? 50% of them are going to say yes, right? So it's like, I say it's sold like French fries, right? Would you like fries with that? Would you like dental and vision with that, right? So those are going to be the supplemental policies or ancillary products that we're going to bundle sell with each, plan that we sell, whether it's an ACA plan or an indemnity plan. All right. So what are you going to learn this month? All right. This month we're gonna turn you guys into expert under 65 health agents. Okay. I'm going to teach you guys how to qualify a prospect fast. Okay. Meaning, with a few qualifying questions, you're going to be able to determine whether or not you have a client today or whether or not you have a client in open enrollment, right? So you can ask, there's 3 or 4 or 5 questions, right, that you can ask somebody and determine on the spot, whether they should be on the private health insurance market, and that's going to be their best play, or they have to go to the ACA, okay, in the marketplace. So you learn how to qualify a prospect very quickly. You'll learn the difference in on-exchange plans and off-exchange plans. We kind of went into that a little bit, but we're going to go much deeper. And again, you guys will be able to tell somebody right away, here's the best option for you. How to bundle sell, okay? How to take how to take the indemnity plan with the accident plan, with the critical plan, and present it to somebody and close the deal, all right? How to bundle sell, and, again, adding the dental and vision. Would you like fries with that? We're going to talk about marketing specifically to our target audience, okay, which is going to be small business owners, self-employed individuals, all right? Most of the time, a small business owner or an owner-operator is pretty healthy, right? They don't have time to go to the doctor often. They're busy running their business, right? Most small business owners wake up every day with one thing on their mind, and that's running their business, right? So they can put food on the table, all right? And so if you got a, relatively healthy small business owner that's making some money, right, and is passionate about what they do and growing their business, then they're not going to qualify for subsidies on the marketplace, right? So a $400 or $500 or $600 a month premium for their family is going to look much more attractive than, say, $2,000. I mean, these premiums on the marketplace are crazy now, right? Without, if you don't get subsidies, it's just absolutely insane. So we're going to target people that have to buy their own health insurance, that are healthy and can afford a reasonable premium. Okay. And then obviously how to make money, right? Obviously that's our goal, right? We want to help people. We want to cover them the right way, and we want to get paid handsomely for doing so. So I want to go over just real quick, guys. I threw these numbers in literally 10 minutes before, but I want to just give you guys a rough estimate of, the opportunity. So let's say you've got a commission of, say, 25%, right? Most of the time, through my years of recruiting, typically when I come across a life insurance agent, and they ask the question, oh, what's the commission level? I say, it could be, 15, 20, 25%, starting out. And it's like they're like, they're scared because usually they're signing contracts for 80, 90, 100 point commissions, right? But you got to keep in mind the premiums are much more expensive, right, on a health policy than, say, a term life or a final expense policy, right? So say the average commission's 25%, right? Say you're selling a base plan, which the commission's 15 points, and then you're selling an accident plan with, 35% comp, and then you're adding a critical illness with, 55 or 60% comp, all right? So the average, we'll call it 25%, right? Average premium $450. Now you're going to get your deals that are $200, and you're going to get your deals that are $800 or $900, right? Or $1,000, right? Let's just say the average is $450. Okay. Most carriers that you guys are going to be marketing with will give you a 6-month advance on your commissions. So if you have a $450 premium at 25%, the 6-month advance is going to be $675. Okay. And at $675 up front, you're also got 675 on the back end, right? Which will start to be released month 7 through 12. So when you get to month 7, now you've got $112 a month for that sale. All right, until you get to month 13, which then renewal commissions will kick in. Okay. But we're just talking first year commissions. Now, 3 of those policies a week, and I didn't specify that, right? Hey, 675 up front and 112 a month on the back end does not equal 100 grand a year. I should have put 3 sale. Do that 3 times a week. All right. And so that was usually, the example that I would give to an agent when they're starting out. Agents always say, well, how much money can I make? Well, 3 sales a week is 100 grand a year. Okay. And that it always lays out that way, right? No matter what contract level you come in at, no matter what products you're selling, if you get you average 3 policies a week in the off exchange market, right? With the private health insurance plans, you're going to make somewhere in the ballpark of 100 grand a year. Now, do that your second year, right? Average the same 3 policies with renewal commissions and back end in full force. You're getting $50,000 a year bump just from doing the exact same amount of work, right? So, again, just a quick example of the type of money that you can make selling off exchange health insurance. Now, there is money to make in the ACA market as well. And again, when we get to that, time of year, when we get to the third quarter and the FFM certificate comes out for 2027, we will start to dive deeper into the ACA products and how to make money when selling ACA. And the key to selling ACA is going to be bundle selling, right? Making sure that you get those supplemental plans in. So real quick, the under 65 carriers that we are starting with, we've got a full ACA portfolio, and that's all done through Messer Financial. Okay. So, Phil, I'm sure if you guys haven't done so to this point, we, can direct you to Messer to get your ACA carriers. And the carriers you want to focus on for ACA is going to be the states you do business in, right? So if you're doing business in Florida, I think Florida's got I don't know, there's quite a few ACA carriers, 7 or 8 carriers. Then there's other states like Arizona where there's 2 or 3, right? So whatever state or states that you're doing business in, you want to have those ACA carriers. Little cheat code on that, guys. I have I've got contracts with most of them, but if I was bringing a new agent in today, I would tell them to get on the ACA. I'd tell them to get any of the blues, right? Blue Cross Blue Shield in whichever state you're in, United Healthcare, Ambetter, and that's it, right? I would have them get, again, there's more, right? So there you got Oscars and Molinas and then there's Kaiser in certain states. So, but if you just had the blues, United Healthcare, and Ambetter, there's really not a county out there that you shouldn't be able to do business in. Okay. And Ambetter, UHC, most of the blues have a pretty good comp. So that's ACA, right? Messer Financial, ACA. You focus on the carriers that are available in the states you're doing business in. Off exchange, okay? Manhattan Life, best indemnity plan on the market. And they've got a full line of supplemental products too. They've got their accident plans, their critical plans, dental, vision. But Manhattan has the best indemnity plan on the market. Philadelphia American, okay? Used to have the best indemnity plan on the market. Still a good product, still sometimes competitive, also has a full line of supplemental products. So Manhattan and Philly, they are the top 2 indemnity carriers in the country. UH1 is United Healthcare's under 65 off exchange carrier, UH1. So I like to have that in our back pocket for brand recognition, right? Because sometimes Manhattan Life, sometimes the objection for a Manhattan or a Philly plan is just going to be, I don't know who it is, right? And although both of them have been in business, Manhattan has been in business for 175 years. They just had their 175th anniversary last year. So they've been in business for a long, long time. They've stayed in their lane, and they do indemnity better than anybody else in the market. But sometimes, prospects are just going to say, hey, I want a brand name, right? I want that logo on my insurance card. So I like to keep United Healthcare in the back pocket for those types of objections. MedMutual is a brand new under 65 carrier. I sat on my first training with them a couple of weeks ago. I just got my contracting done. I'll have a meeting later on this week to go over the portal and the products. So I'm just now starting to dive into MedMutual, but I'll tell you what, the training that I sat on a couple of weeks, I wouldn't have gotten contracted, and I wouldn't have recommended it to Phil if I wasn't impressed by the product. The product looks great, actually. I think that MedMutual could potentially be one of our top carriers. LifeX is one of those one of those association plans I was telling you guys about. LifeX is essentially group health insurance that individuals can buy into. And so it is going to be a little bit more expensive than some of these other carriers that we're talking about. But you're going to have people that just want the Bentley, right? I like when I'm presenting to a prospect, I like to say I got the Bentley of health insurance and I got the Mercedes-Benz of health insurance. I usually go in with LifeX, here's the Bentley, right? But if you can't afford the Bentley, the Mercedes-Benz, Manhattan Life, which is, still more affordable and is going to give you just as much value as anything else, right? So LifeX is going to be a good product of ours. Now, LifeX does not pay advances, not yet. I think that they're trying to work towards that, but they do pay a very handsome per member per month, or not per member per month, per policy per month. All right. So, I mean, I've been selling LifeX now just for, what I say, I got started working 8 months ago again. So just for the last 8 months, and I got a nice little residual income coming from them already. Allstate is, I like to keep Allstate for their supplementals. Okay. Their ancillary products. They've got the best AME product on the market that bundles with ACA plans. They also have the best dental plan, in my opinion, on the market currently. And they also have an indemnity plan, and they've got a short-term plan. They've got a full portfolio, but I like Allstate specifically for the supplemental products. And then VCare. I don't think this is something I talked with Phil about yet, but VCare is the advocacy membership. All right. I'm going to highly suggest that you guys include an advocacy membership in every single package of health insurance that you sell. And I'll tell you why. It's priced right to sell at the point of sale. All right. So it's $12 for an individual, $18 a month for a couple, and $24 a month for a family. It will pay for itself the first time your clients use it. But what it'll do for you guys is it's like hiring a customer service rep for your business. All right. But not having the payroll that comes with it. In fact, you actually earn a commission for every membership that you sell. All right. So you get paid to pass your customer service work off to the advocacy team. And just think of the value that that's got in your business. When you get to the point of, 50 health clients, 100 health clients on the books, you can pretty much guarantee that every week somebody's going to need something. they're going to need to find a doctor in network, or they're going to need to submit a claim, or they're going to have questions about a claim that was denied, or they're going to they're going to have, maybe they had a price gouging situation and they received a surprise medical bill, in which case you want that advocate on your team to go in and appeal that denied claim. You want that advocate to go in and negotiate that surprise medical bill, right? So I strongly recommend including advocacy in everything that you sell, so you can free up your time and I will go into, I'll go in detail on how to sell that, um, and the services that are offered and all that, right? And building value. But again, it's a lifesaver for you and your business, right? When you start to build your health insurance book of business, you trust me. You want to spend your time doing what you do best, which is going out there and marketing and acquiring new clients. Okay. You do not want to spend your life on hold with an insurance company to, to talk about appealing a denied claim for your client. Now, we can all agree that we want to provide that level of service to our clients, right? But do we really want to do that work? No, right? I don't think anybody wants to do that work. So advocacy will be something that I'll get you guys trained up on and include that in every single policy that you sell moving forward. All right, so guys, that's what I've got for now. As you guys can tell, we've got a lot to go over. So I'm excited to be doing this on a weekly basis. Next week we'll go over, we'll start to talk a little bit about the sales process and some marketing strategies and things like that. And then and then we'll really start diving into products and quoting and presenting and enrolling and all that good stuff. But this is all going to be recorded, and I know that the goal is to build out a learning center, a learning management system, so we can have it all in one place, and you guys will be able to refer to these resources as you need them.
Yeah,
Only 3 minutes passed. That's pretty good.
No, I thought it was good because I know I blabbed in the beginning, but we have the strategic partnerships in place again. So for those of us who are going to go down this road, we have again, think of Valor as air traffic control. We've got certain spots for certain things. Okay, so Messer, we mentioned the ACA stuff. Finishing up contracting for the ancillaries. You got the critical illness policies through major carriers like Mutual of Omaha, Assurity. We have those with 3Mark. So we have things in strategic spots. The client doesn't need to know that, but once again, from a foundational standpoint, I'll create the roadmap to help you guys figure out where do you have to submit things. And most importantly, what I've said from the beginning is that I value the ACA marketplace. I value the opportunity to do this. It's just having the opportunity to bring it all together. So between Gloria, between Drew, we've got the strong team to really drive home the training aspect. And what he said at the end there, the V-Care, is that how you say it?
Yep.
That to itself is such an asset, especially for your clientele. Find the right price, find the right value for anything. So we were talking about that when he came to visit, when Drew came up here to Nashville to visit, trying to find the most cost efficient price for, an X-ray or, other sorts of features. So invaluable. Again, we always have to sell the story, not the products, because as Trump did, with changing with the Big Beautiful Bill Act, that changed a lot of things. We've had subsidies and all the other stuff run in the way. We can't let that run in the way of us doing what we do best, and that is sell a story, not focus so much on what most of the industry has done is try and sell free insurance. Okay, there's no free lunch. There's always something. And so if we master the stories, we master how to do it, transactions become valuable, referral networks and things like that. So, as always, Drew, I appreciate it. Again, the same cadence for this every Tuesday, 4 o'clock Central. We're going to keep this going. I will be in a meeting next Tuesday at 4, so I will still open it up and I will hand it over to Drew, and we're just going to keep this rocking and rolling. So thank you guys. Thank you, Drew. And we'll see you guys next week.
Thanks, Phil.
See you guys.